All right, we got people coming in. We're gonna get started with the webinar just shortly as we let all the attendees coming in. Okay, well, 2022 year in review. I think it's appropriate time now in December to talk about our year. Again, I'm not going to be giving you any forward-looking statements. Unreleased financials will not be discussed. That's normal. We have to be abiding by all of the SEC rules. However, we can talk about the horizon of our plans on acquisitions. As you know, that is part of our strategy for this coming year, 2023. And 2022, obviously, we've had already one that is that we've agreed to acquire, but hasn't been cleared yet, but it's hopefully will be done soon. Anyway, this is what we all got. Let's get started. So as you can tell, there's a lot of market volatility. Even today, the market went down. The previous day, it went way up. It goes up and down a lot. That volatility scares people. The venture funding, there was a steep decline, and that's something we expected, that the amount of venture capital that's going to be invested in companies will go down a lot. So we've found the numbers. It's down 69%. So what you're seeing is venture capitalists are going to really support only those companies they believe are keepers and are able to continue, and then the other ones, then they let go. NASDAQ has gone down 30%. That's pretty significant. And then the interest rates keep going up. So a lot of people are focused right now on what the Fed are going to do. If they're going to continue raising. There's a lot of people talking out there about the concept that even if you raise interest rates, it doesn't mean that that you're going to be able to stop the inflation, because there's so much money that was issued, so much very inexpensive money that was issued, that it just has to be, and a lot of them have been invested in not so good investments, and that has to work itself through. That takes time. So anyway, let's go to the next slide. So how does it affect us? Well, so far, we've raised about 190 million for startups. We still have a few, this is not as of today, but anyway, so it's looking like, we'll finish the year with a little bit over 200 million and funding raised for companies. We've raised over 10 million for our own funding. So there's about 36 million available in the total raise should we want to continue the whole amount. 184,000 new users signed up to the platform. 20,000 companies applied to raise a round. That is a big number. We've seen a huge influx of companies. So one of the benefits of a market downturn is that a lot of companies who thought they were perfectly lined up for venture capital are no longer able to find that money. They come to see us because, they initially didn't think, oh, equity crowdfunding is my route, but as other options dried out, they're willing to consider it. That is a great win for us. That's a huge win because we believe we're the future of finance. Anyway, the next thing is 4,000 companies referred by our scouts. This is a first for this year because it didn't happen last year. We built the scout program. We've had it about 2 years so far. And our scouts are our best sources, frankly. It's been a huge success. We've done some math, and the amount of raise for scout referred companies was a lot, was a big percentage of our funding, not a majority, but a good size. And so we're very grateful to all of you who've sent us companies, because that makes a big difference. 650,000 of perks for founders. So these are the perks that are delivered by the companies as founders, as investors invest. Our owner's bonus has been a big hit. So it's gone up 180%. And we see this as a very important part of StartEngine, the owner's bonus. It's about 12% that purchase it, and now it's going up. We've seen an increase, almost 15-16% of the investors will buy the owner's bonus, and we think there's room to get to, probably 30% as we optimize the program and more people are aware of it and its benefits. 77% product enhancement. So what does that mean? We optimize everything. So, there was a phase where we were building new things, and now you will see every 90 days some enhancements. And what it is, for example, the investor portfolio screen enhancement, but also we're going to optimize our flows from the time someone comes to a page or on the app and they make an investment. Those we in the jargon in our world, we call it A/B testing, where you try two different things. We're going to continue doing this so we can absolutely optimize the flow. And why? Because it's easier for people to make investments, and more people will. It will make it seamless, easier, faster. Also, we're listening very carefully to what our investors are saying about issues they're having with our service and products, and then we're going to enhance it. 100% StartEngine brokerage accounts. So now that is a big deal. That is the glue that brings everything together, and will also fuel our acquisition strategy, because what's happening here is pretty simple. We, about 2 years ago, we applied 3 years ago to be able to hold cash and securities like a bank. And as you can imagine, that's a lot of work, and it requires a lot of processes and systems and reports. So we did that. We built the StartEngine accounts, and we are now holding cash on behalf of investors. We started out by deploying only 10% of the people. We wanted to understand how it would work if people were able to successfully get through the process, and it works. And so about, I would say 2 months ago, we decided to make it 100%. What it means is that everybody who comes to invest on StartEngine will have an account. Now, this is a first in the marketplace. Our competitors don't have it. They would have to go through the same process we have to be able to have it. They typically work with third-party banks to hold the securities or cash, if any, like we did with Prime Trust. Now, Prime Trust decided to shut down their operations. So obviously we were lucky that we had planned this thing a long time ago. So it was just fortuitous. We didn't know they're going to shut down their service with all the third parties, but they did. And we had our solution in our hands ready, actually. And so that was lucky. And then, so this will be, I think, one of the most important things we've done, where we can hold cash and securities on behalf of investors. And right now we're holding the cash, and the securities are held basically, we're basically the nominee for those securities, and down the road we're going to be also the carrying broker for the securities. And as we add more services, more content, like, for example, if we can add some real estate and more collectibles, this all sits in one account. And that, to me, is fundamental. And it's normal, because if you look at the people who have accounts at Schwab and Robinhood, they have one account with everything in it. 2x StartEngine led the industry again in November. So we're more than double than the next one. And that's before we bring in the seed invest revenue, by the way. So if you add that in, then we're going to be pretty significant ahead of everybody. But anyway, we are very proud to be doing better than all the other guys. And because look, everyone is having difficulties because you can see the market. It's pretty obvious, but even in that situation, we're doing good. And that is a testament to our team, to our resolve, our focus. That is a testament that we're able to achieve this. We've had also this year 4 funding rounds over 10 million. So these are the companies: Nightscope, Monogram, Boxable, and Own. And that's important because it shows to investors that we can raise large capital rounds. For issuers, companies who come and see us, they like to see that as well. So it really is an important milestone. And then we also had a phenomenal week. We had one week, second week of February, we had 8.8 million raised in a week. And then in April, we topped it with 10 million. And then end of August, we topped it with 10.6. So it shows you that if we have the right companies raising money, we can have some very massive weeks. And I wouldn't be surprised that one day we will have a $50 million week one day, And how? Because we just need to keep getting the word out that we can raise money, that investors are interested in being early on some companies, and that we need more volume. But when you put it all together, having a $10 million week was phenomenal. It was just something we didn't really plan for, but it happened. And then we also made the Inc. 5000 list, ranked top 25 of the fastest growing companies in the United States. That is very cool. What does it mean? Not sure what it means, but it also is some form of recognition. And then owner's bonus, 3.6 in revenue through Q3. So that doesn't include Q4. So you can imagine if you had Q4, it's more. And it grew 80% year over year. Now, why do I bring it up a lot, the owner's bonus? Again, it's a recurring revenue model for our company. Think about Amazon Prime, recurring revenue model. That people love recurring revenue models. Well, owner's bonus is that. It has that recurring feature in it. And it's very good. So we're excited because not only we raise money for companies, but with the owner's bonus, our investors are getting more shares. And that is very cool. So they pay $275 a year. That might pay off in one investment, getting 10% more shares. And then also this year we teamed up with Indiegogo. That is a partnership in development. We love those guys. Great team over there. They have obviously a ton of founders. 800,000, 1 million, 11 million backers. Those numbers are a dream for us. They've built that over a very long time, by the way. And we're happy to welcome some of those founders on our platform, and we will continue building with them integrations. So we decided this year we're going to go on the offense. Why? When times are tough, things are not the growth of the industry is not as steep as it used to be. When the markets are difficult, well, what else are you supposed to do? Well, a lot of our competitors are suffering more. And some of them who did not raise enough capital are going to suffer enormously. And they may not have any other options. So we were lucky to have the opportunity to acquire Seed Invest from Circle. And that acquisition was completed. But we need regulatory approval. So FINRA is going to be reviewing now. They're in the middle of the review. And should that review go well, which we expect it to go well, then we'll have that acquisition completed. It does take time. We're not sure how long it takes, but it's going to get done. And it's a pretty exciting thing because in a way, Seed Invest was the number 3 competitor in the marketplace. And we believe we're number 1. By adding Seed Invest, we're just doubling down on our ability to be really the name brand in equity crowdfunding. With all the things we've built, the the accounts, StartEngine accounts, the owner's bonus, and all the other things we've been building, it's just amazing to watch now that we have that acquisition. And once we bring in all those 700,000 new investors and users, and then we bring in a lot of the companies that are customers, I think it's going to be great. So, one of the things we're interested in is your feedback. So please go into the Q&A, click on it, and share with me some of your questions, comments. One of my questions is, who should we acquire next in 2023? Really interested in your feedback. So let me start with Mark, who has a question. Do we have an availability date for an Android version of the mobile app? That's a great question. So we now have an app, which is the iOS, and it's about roughly 15% of our traffic is going to the app. We believe we can get it to about 30%, maybe more. Once we get there, we're going to build an Android version. So that is going to come, but I can't say it's going to happen next year. I don't want to say it. It all depends on the success of the app. What we've noticed is that a lot of the investors like the web. They probably work on their desktop when they make investments. And then there's a whole group of people who love the simple thing on the phone. You click on the app, you see a new company, you can read about it, and you click invest, and it's very easy to use. Mark asks, any thought of a perk based on the number of StartEngine shares owned? For example, if you own 1,000 shares in StartEngine, you get owner's bonus for free. Or if you own 100 shares, you get owner's bonus at a discount. That's a really good suggestion. We will make note of it and look into it. That's a great suggestion because not everybody, I would say about a quarter of the people who invest in StartEngine end up buying the owner's bonus. So 75% didn't. So if we could give a discount on the amount of shares or give it away if there's a big purchase, why not? I mean, that could be interesting. So we'll look into it. We may have to do some review from the regulations and see what happens, but I think it's possible. John asks, with the economy crashing, okay, I guess you could use the word crash. It's not exactly a crash, but it's definitely a bear market. Stock market's crashing, record high inflation, regular people feeling the crunch. Will this cause a slow year ahead? People won't be investing because they won't have the money. Well, and they're on a tight budget. No, it's true. Look, I would say the crypto crashed. I think that's a good way to explain crypto. It's down, 70%? Stock market's not. So we're in a bear market. I think you're right, but I don't think it's exactly true. And I'll tell you why. We just scratched the surface of what's possible in equity crowdfunding. So should we get very exciting companies that have a built-in community of people who want to invest? Well, that might be immune to the things you're talking about, because these people want to be investing. And think about, during difficult times is when some of the best companies like Facebook were created. And so in many ways, investors are smart. They realize that if the company's priced properly, and they are able to do well in these times, imagine what happens when things get better. Eric asks, Do you have plans to further consolidate the EC market while valuation has significantly contracted? Net capital is one that seems to be struggling. Companies not raising much capital. Appealing portfolio of companies currently raising on their platform, but they've raised very little capital. Yeah, I think I should look into it. I know Net Capital right now is doing a funding raise because I saw that they filed an S1, which is a form that you file with SEC when you want to raise money. So I'll have to get in touch with them, see what's going on there. But it's unfortunate that they can't raise a lot of money. I think that is a problem. But okay, look, we should add that to the list. But the one thing I'm worried about is if we acquire business that doesn't have a lot of revenue, that's a problem. Edward asks, if not an IPO, then what is your overall intention for this company and what does it mean for all us investors in StartEngine? So our plans, and I've been very clear, is yes, we would like to do an IPO. We don't have a date for that, but we would like to do it. And I think we need to get to a point where we have enough revenue to do that. So I think if not, that is our plan. Now, obviously, plans can change, guys. It's the way it is. I've contacted you guys for a few times, did not receive an answer on why do not see the SC investor tag. Yes, it is a bug. So I can tell you, Edward, it is a bug. We're going to fix the bug. It is a bug. It's because when we switch banks from Prime Trust to Bryn Mawr for the escrows, for some reason it should be on your tag, but it wasn't, and we're going to fix it. Bring back the option to see how many people have invested in a company, like knowing how many investors. I agree with that. I completely agree that we should bring it back because I think people need to know the enthusiasm. You can probably figure it out by dividing by 1,000 the amount invested and get the number of investors. But okay, I agree with that. I just missed out on the last stock split. Do you think another split? We can't talk about stock splits or future stock splits. The previous one was done. And again, a stock split is just a math equation. You multiply by 2 the number of shares and divide, by 2 the price. So it doesn't create more value for the company. It's just allowing the share price to be lower. I like the idea to try to acquire the WeFunder platform. I believe they have some good startups to invest in and could strengthen StartEngine. I agree with that. I think WeFunder is a great company, by the way. The only thing with WeFunder is, first of all, they're not interested in talking to us. That's the first thing. And secondly, I don't know if the regulators would be okay because they're definitely up there in terms of volume on regulation crowdfunding. They don't do much regulation aid, but mostly regulation crowdfunding. And if we end up acquiring WeFunder, we would have 80% of the market or more. I don't know if they're too excited about it, but oh well. Kim asks, I recently received an email from Boxable that my Boxable shares are now available on their share management platform. How does this platform work with the StartEngine broker platform? I don't know about this. Who custodies the share? Well, Boxable is very possible that you have the shares in your name. I'm not aware that we are their transfer agent. We might be, but I don't think we are. And so that means that the shares are in your name. There's no custody. Keith asks, Net Capital should be acquired next, then go after Republic. Wow, okay. So people like Net Capital a lot. People like Net Capital a lot, which is very cool to see. Hani asks, do you intend to focus exclusively on Reg CF? I personally found value having a mix between Reg CF and Reg A, which is where Seedinvest stood out. This is exactly what we're doing. We have a mix. It's almost 50-50 between Reg CF and Reg A. And I agree with you on that. John asks, my question is, what does it take to get a funding campaign on StartEngine? Well, it's a process. Companies submit an application, we review it. Our sales team reviews it, then they get together as a group to decide which one is eligible to raise money. And then once we have that process, then we go to the onboarding. Unfortunately, it's longer than I would hope. My dream is that someone can submit an application and a couple of weeks later they're raising money. That is my dream. I know we're not even close to that. Mark asks, I enjoyed the new portfolio. Great, thank you. We're looking at seeing companies company trades on the secondary market now that StartEngine is converted from Prime Trust. Yes, that is true. Early 2023, I hope so. Maybe even this month we will launch some companies. We're trying really hard. Again, we changed the way our secondary market works. And the good news is we'll be able to launch a lot more companies. So wow, it's been a long road, but I really appreciate your comment. David asked, do you have an interest in acquiring any startups specifically in the AI, artificial intelligence sector that facilitates StartEngine's mission? You know, I have something to tell you that it might sound weird, but I'm not sure the regulators would welcome AI because AI has its own way of doing things that is hard to explain. You know, if it's a pattern matching AI engine and they don't understand how it works, they would be like, well, hold on a second. Why don't you go back and explain it to us? And frankly, even if we gave them the source code, which they don't read, that's not what they do. We'd have to put it in terms that are accurate enough. And I don't know if we can. So it's interesting. I don't know how the financial industry is going to work with AI down the road, given that regulators need to know what's going on. And you can imagine that if the AI creates a situation where investors lose a lot of money, that would be a big problem. Michael asks, would a company like Rally be an option as far as whom to target? I think yes, why not? We should look at them. We should look at all these great companies. Lewis asks, regarding the next acquisition, what is the primary focus? I mean, are you looking to grow investor base, geography? Okay, I'll tell you what I'm thinking. I'm thinking the next acquisition we should make is real estate. Why? Real estate is one of the largest investment classes available out there. It's an amazing investment class. You get dividends, appreciation. Sometimes you get some tax benefits, but it's an amazing investment opportunity that I think has a lot of potential. So I think that would be great if we can identify a real estate platform. We've done some collectibles, as you know, but we're not big in collectibles. And I think looking at a collectibles company would be valuable as well. So both are good. In terms of buying another platform that does Reg C, Reg A, I think we should consider that as well. But it's, we're doing well already there. And there's a saturation point where regulators are not going to be amused if we were taking over too much of the market. Frank asks, I have accounts at StartEngine and SeedInvest. Will they be combined? That is our goal. That is our goal, Frank. We don't have a plan to communicate with you right now because, first of all, we have to get through the regulatory approval. But then once that's done, we're going to communicate a plan to all the investors at SeedInvest. And I think part of the reasons why it is attractive to us to acquire SeedInvest is that we have a custody solution of our own, which is, again, we're the only ones to have that. Hani asks, I've invested in over 100 equity crowdfunding companies, as well as others, VC, PE directly. Wow, impressive. I often hear that VCs, they dislike funding companies that raise from crowdfunding. A recent example has been NaraRx, which started on SeedInvest and did great until they ran out of money. I personally disagree, but I'm curious to hear what you think. Well, the world according to VCs, the world according to VCs is a pretty narrow world, as you probably imagine. They like to fund companies that fit their model, and it's not a pretty picture. Because again, as they have a narrow model, they have a narrow model of who gets funding. And as you know, our economy is more than just them and their companies. They do maybe 2,000 deals a year. Not a lot. And then out of those deals, some of them get a humongous amount of money, 200 million, 300 million. It's pretty impressive. So they like to double down and make huge bets. You know, the FTX is a great example of a bet. Didn't go well, but it's okay because that's the model they have. So my view is, you know, they may not be excited about equity crowdfunding today. I think next year they'll be more excited. And I think following year even more. Why? Because they'll see that there's a path to liquidity in what we're doing, which is pretty exciting. George asks, will investors start to receive profit sharing or dividends? Well, that's a great question. So we're not planning any dividends or profit sharing at the moment. Profit sharing we wouldn't have, but it would be dividends, right? Because we're a corporation. And it's not something that we're planning to do. But what we think the logical thing for a company that is growing is to reinvest its capital and grow. Now, this may change if we get success beyond what we expected, but that is our plan. David asks, when you see C-Invest owner stock in Monogram and Cytonics actually being absorbed with StartEngine, question mark. Again, I think it's the same question. As soon as this is completed, we will announce a plan of how we can move all those shares. George asks, will your average raise, what is your average raise? And can you handle a large raise, say 25 million or higher? Yeah, well, we've done 25 million and higher. Well, Boxable is a good example, but I would say the average raise last year was 1 million. I don't know what it is this year. I think it's less. I think it's probably more around between 500,000 to 1 million, but I can't tell you what it is because I don't know it. But last year was 1 million. Mark asks, how is StartEngine considered the next acquisition more vertical, acquiring a transfer agent? You know, I got a lot of comments of that, of acquiring transfer agent. In fact, we had some people come to us and say, hey, you should buy us. That would expand our business, not necessarily vertical, because those transfer agents are transfer agents for public companies as well. So now we're in the public company market. And you know what? I'll tell you this. The most important thing I think we can offer is absolute focus in privately held securities. We call it alternative investments. That is, you know, companies, startups, that is real estate, collectibles. These are considered liquid, and we will create liquidity for those things. And I think that this alternative investment market is going to get a lot of market share down the road and a lot of attention, because it diversifies an investor in a way that didn't do it before. And yes, there will be a lot of investment that will not return, but some will do very, very, very good. And that is really the idea. And I think one of our difficulties is to explain to investors that they really need to have 10 investments a year. It's just too hard to make one bet. And I see a lot of investors come on StartEngine and make one bet, and they really should do 10. They should get comfortable. That means, let's say they make $1,000 investment, they should try to figure out a $10,000 portfolio. If it takes 2 years, fine, but 1 to 2 years. And then Brian asks, net acquisitions, net capital. Again, I'll add, we got a lot of those. And it's 6 million market cap. We could do a reverse merger when the markets improves. Interesting. And then Hani says net capital is as well. So I don't know. A lot of people are very excited about net capital. Another one says, how about buying Dalmore? Dalmore, great company, by the way. Love those people. They basically are more of a plumbing, back end solution. We have all the things they have. It's just they just specialize in helping people who want to raise money on their own website, and they specialize in that, plus other things, by the way. It's a very good company. So anyway, great. Well, thank you, everyone. This has come to an end. I really appreciate your proposals. If you've typed in some questions or comments, I'll review them later. I unfortunately couldn't answer to all of those. There was a lot. Very excited to see your enthusiasm. And again, we've come to the end of 2022. I'm very excited by 2023. We have a lot of plans. I will share you those plans in our quarterly meeting that we'll have sometime in the next 90 days. I look forward to having that. We'll show you our 2022 financials in review those carefully, and then tell you about our plans for 2023. Thank you, everyone.